Three, two, one, action. All right, folks, it's summer. Has summer officially begun?
Correct. Yeah. Memorial Day usually is the sign that it's officially started and the temperatures show.
So out with the felt hats and in with the straw. There we go.
Reminds me. I need a new straw hat. Can't find one.
Well, welcome to June Radio Show, folks. I got my friends here, Coy and Ryan and Ryan Allen, here for the Entre Real Estate Show. And we're going to talk about, we got 30 minutes today. We're going to talk about the June market update. We're going to talk about insurance in 26. We're going to talk about our recent East Texas ranch tour, and then we'll close out. So let's get started off with, we've had some fans of ours that have been interested in stats. So we have our combined residential stats that we're going to talk about LaGrange, Schulenburg, Flatonia, and Weimar. The past 12 months inside, these are city limit stats, okay? So inside the city, LaGrange has sold 50 houses. Schulenburg has sold 19, Flatonia 2, and Weimar 10. And so you're absorbing, like LaGrange, you would have an absorption rate of a little over 4 homes per month in selling in town. Schulenburg, about 1.5 homes are selling in town. Flatonia, less than 1. And Weimar's about 1 per month. So if you have a house in town, that's your absorption rate. So if you have 10 on the market, you're absorbing 1 a month. It's going to take you 10 months to maybe absorb all that supply. So if you're pricing your home, you could, if you're not pricing it right, you might be sitting there for a minute. The Flatonia's only sold 2 in town, which is a staggering number. Flatonia was hot for a long time, but to see only 2 homes that sold in the city limits is a staggering stat.
Again, these are homes with at least 1 bath, 1 bedroom on less than an acre. So there could be possibly some 2-acre tracts in town or 1.1 in town that sold, but those don't show up on the reporting.
So just kind of, when you take this, folks, you take your active listings and you divide it by how many you're absorbing per month. Your months of supply in LaGrange is about 12 months. Schulenburg's 9 months. Flatonia, I don't even want to say that, but if you have 9 on the market, you're only absorbing 2 in a year, that's like 54 months of supply. And then Weimar's got about 15 months of supply. We haven't seen that many months of supply in a long time.
Definitely. When I went back and last time I ran these stats were actually 2023. The numbers were crazy different. Those markets were still fairly hot. Things were moving, but as far as like average per square foot, when I look at those numbers, an average sales price, those are pretty consistent. What we saw in 2023, the only big difference, Flatonia was hot back then.
It was.
It's just right now the average home sales price is $145, which that's extremely low, but that's only 2 homes. So
yeah, it's hard to go off that. Did we just go over all the average sales prices? So LaGrange was $284,000, Schulenburg's $267,000, Flatonia $145,000, and then Weimar's $263,000. That's average of what's sold in the past 12 months. And then I just want to throw this out there. So I had heard a rumor out, I'm on social media every now and again. And so somebody posted today that Warren Buffett, though Warren's retired, that Berkshire Hathaway had invested in housing this week. So I put this in my little chat buddy. I said, Chad, Warren Buffett recently invested in housing. I know he just retired, but I heard Berkshire Hathaway just invested in housing this week. Is this true? I said, yes, the rumor you're hearing is substantially true, although the details matter. It says Berkshire Hathaway did not just buy a few housing stocks this week. Instead, Berkshire Hathaway announced a major acquisition of home builder Taylor Morrison for approximately $6.8 billion in cash, making it one of Berkshire Hathaway's largest housing-related investments in years. So with that being said, it talks about, they own stocks in Lennar, D.R. Horton, and NVR and all this. But in short, and this is all from Wall Street Journal, said, yes, Berkshire Hathaway just made a very large housing investment this week through its acquisition of Taylor Morrison. And it is one of the strongest public votes of confidence in the long-term United States housing market we've seen recently, even though it may not be in the next 18 to 24 months, their long-term outlook for housing is positive. So I know you're seeing these numbers right now we're talking about that don't sound that great, but long-term prospecting, when you're seeing a big investment like this from a big company like that, I think long-term you can feel pretty good about it.
I agree. One of the things that pops in my head when looking at these numbers, Chip, is average sales price. again, for the last 6 to 8 months, the only thing moving on the residential side are things around the 300 mark.
Yeah.
If you have something brand new at 370, 380, they're slow to move. I mean, we've had a couple newer homes on the market above 350 that have not moved.
I did Brian Buffini coaching for a couple of years. Brian's a big advocate of real estate by referrals. And he said something I think it was last week or the week before, but he said, if you want to fix the housing market, he pointed at a gas pump, you got to fix this first. So
it's true.
It's
all that stuff's related. It's all
and we feel it on the gym side too. You're seeing people getting pinched right now. We're seeing your gym memberships that are delinquent going through that kind of stuff. I was on a management call yesterday. I try to pop in on those calls every now and again. And I was listening to the managers complain about their delinquent list and how they're going through those. And they're dealing with that right now. And, and it's hard, because you're trying to keep people coming, but, at the end of the day, there's only so much to spend. And when you're paying at the pump too, it hurts you.
Mm-hmm. I agree.
So, but yeah.
I want to go back to what you were talking about with the Berkshire Hathaway buying that they're home builders, right? So that's like confidence in like the building of homes.
Yeah.
Rather than, is that different than like the BlackRock like investments we see where they're kind of just buying the already existing property?
Yeah. Taylor Morrison's a home builder. And so they bought Taylor Morrison stock, which means they feel very confident in the housing market. No different if you're buying Home Depot or Lowe's or anything like this. Your confidence level in the housing market, that people are going to be buying lumber and all this.
Building new homes.
Yeah. And we have been slow to build homes. And when we do have a housing shortage, there's no doubt about it. And so there's just this push-pull thing right now, trying to figure out affordability and all these things. And you're seeing we went to the TAMU real estate conference, and they're coming out with new ways to build homes. Even Wells Fargo right now is invested heavily in, 3D printing homes. That's a new thing they're coming out with. And they're going to give you a lower interest rate for buying a 3D printed home. So they're coming out with incentives for this stuff for more affordability. So yeah, different things things are going to reinvent themselves. And I guess, over time you figure it out. So yeah, very interesting stuff, right?
So I guess moving into another topic for the day, the insurance markets. Right? And what can new homeowners, if they are buying these new homes, what can they expect going in 2026?
I'm gonna let Coy touch up on this one.
Let's distinguish new homes versus existing homes. The insurance market, it's finally stabilized. They've recovered from inflation. They've recovered from loss of reserves because of storms and inflation. So what I hear in the market is they've finally stabilized, and your rate should. Back in the day, rates would jump 5% a year. Then we had the issues the last couple of years where they were jumping 30 to 40%, or just flat out dropping you. Those we expect increases, like always normal pre-COVID. I would expect your rates to jump 3 to 5%. I mean, you may get if you have a claim, you may get a 10% jump, 12% jump. But one of the things that point out about a client, customer, friend, family getting into a home and then having to purchase insurance for that home. One of the things that stuck out when I got word this morning was travelers won't even insure you if your roof's over 10 years old, in our area in Texas. So if you're buying a new home, or you're a real estate agent and you have a client looking at a home and that roof's 10 plus years old, I mean, you're going to have limited markets to go and buy homeowners insurance. One thing that popped out to me, but it's definitely, in our area, Travelers is strong for residential in-town homes. And in our area, Germania and Hoheim are strong for outside in the rural areas. They're still going strong. Hoheim's making a comeback. They announced they've dropped their annual membership fee. They've lowered it back to where it was I think 18 months ago, they raised it to $250. That's a lot. When you're homeowners insurance is $1,200. Now you're paying $1,450 because of a membership fee. I think they've lowered that back down. I don't know the exact number. I don't have it top of my head, but that's a game changer for them. That brings a lot of their old clients that left for that reason. That gives them an opportunity to come back, and they're bringing back some loyalty programs for existing clients, which they're Hoheim's back, they're healthy, and they're trying to be aggressive in the market. And Germania continues to be a strong option for us. We have a very strong Germania, Columbus market, Colorado County market that continues to perform very well for us. Our clients are happy with them.
Yeah, we just need to pray for a slow hurricane season like we had last year. Being that we had no hurricanes touch United States last year was very good for the insurance market.
Yeah.
And so if we can have another summer of low to no hurricanes, that would be fantastic for the market. So, because a lot of these companies turned around profitability last year, they got profitable again, whereas they were not profitable for a while. Even though premiums were going through the roof, they were struggling. So, yeah.
And it's mostly due to those like years of natural disasters kind of just caught up to them. Is that why people are suffering?
Yeah. So they had the normal natural disasters on an annual basis, 2 or 3 a year. And not just the hurricanes in our area. And there's pass tunnels that go through the state that are large hailstorm related. 5 years ago, the Rio Valley got killed with a hailstorm. They still talk about today. I mean, if Hoheim's concentration is in 3 counties and you lose all these cars and you have to total them, it takes a hit on the pocketbook. But going back to that, what were we talking about?
Just like what caused like the pain and the previous
inflation and then the natural disasters. So basically inflation was going faster than the premiums were rising, and they weren't able to recoup on all those natural disasters. So that just dipped into the reserves. And even the first year when COVID happened, they actually like lowered rates for a minute. And then you lower the rates one year, and then the next year you have this spike in inflation. Then you're like, this 2 years of like, we're behind now on where things need to be. And then, so yeah, that makes sense.
Take the hurricanes and all that. And then you have like just the auto industry too, with the car wrecks and how expensive vehicles are. You back into a FedEx truck and you get a $1,500 light, Yeah. I know that from personal experience, but it's stuff like that. Like, and cars are expensive, lights are expensive. And, and I was reading a thing about the auto industry too, like Ford and everybody there, they're not building as many cars anymore. They'd rather sell a few and make a lot more money, So it's an interesting deal with that too. They learned through COVID, we can build less and be more profitable. And that's a good point. I thought about this when I was talking to my brother. My brother's in the auto industry. He's been on the service side for 30 plus years. He finally worked for Mitsubishi USA. They're opposite. Yeah.
They're putting out these cool, reliable cars that have the best warranty in the market, and they're gaining market share that way. Whereas they're probably going for quantity while Ford is going for quality and price. Yeah. Yeah. It's interesting. So let's talk about, the other day, Coy, Ryan, and I, we went to East Texas. We spent some time. We did a ranch tour. Last year, we did a ranch tour up in the Panhandle. This year, we went to East Texas, went through the Piney Woods, went through Conroe, Huntsville, that whole area. It's a different market over there. So we try to go to a different part of Texas every year and tour ranches with the Realtor Land Institute Texas chapter. So it was a fun time, and we learned about timberland and a little bit, yeah. And we just saw some beautiful properties. It's a different country out there. It's some beautiful area, no doubt, but it's different. And I was going to maybe touch up Ryan. I texted Ryan last night. Do you remember when we went and looked at timberland and we talked about timberland and pricing and all that?
It was one thing that stuck out to me. I don't know why, but you texted me that and I was like, oh yes, I actually do remember what he said. I don't know why. But we were at one
before we start. The reason I wanted you to talk about a little bit about timberland is because I did a case study one time about a dentist who bought timberland, and his retirement plan was to buy a timber tract, and when he retired, he was going to sell that timber off as an investment kind of like a 401k or an IRA or whatever, but it was an investment idea. And so it showed how he invested in a timber tract. And when he retired, he was able to sell that timber off. And it was how he made an ROI on that. So
nice. Yeah. They were kind of talking about like what your ROI might be. And that was interesting too. So we were at just a normal like pasture land ranch, which holds a little bit higher value apparently compared to like the timber tracts around there. And a lot of the reasoning is because there are no improvements on these timber tracts, right? It's just trees.
Yeah.
And they're like 2 feet apart. So there's nothing you can do except invest in it, while you're a dentist probably. So they were talking about how this particular ranch we were at was, comparatively priced to like Fayette County ranches, I would say. But it was hard for them to come up with comps around them because everything was timberland. So, they had a hard time valuing the land.
Yeah.
Because timberland, there's a lot of factors that go into what it's worth. It's thousands of dollars cheaper per acre typically than pasture land because, it all depends. You can't use it.
Right. Until you sell the trees off.
Yeah. And that's a big deal, right? Whenever you buy it, it depends on the age of the tree, like that are there already. Like, so you might still need 20 years for them to grow to proper height to be cut down and usable. So you got to keep that in mind. So you might, and it, depending on the age of the trees, the width and all that too. Yeah. And so depending on when you buy the land, it will vary in price, based on the age of the trees, what species they are, if they're hardwood or, softer pines. The other interesting thing that they noted was distance to the mill will affect your return on investment a lot more than anything else, really. So if they got to come in and haul these trees further than they'd like to, then you're going to start losing more
transportation costs. And all that. Yeah.
So this dentist it sounds like he hit it right, but some people around there, it sounds like if they'd come in with that idea, like, okay, I'm going to grow the timber, I'm going to own the land. And then whenever it's time for me to improve the land, I will sell the timber. But then based on other outstanding factors, their return on investment can be minimal or even negative. Just getting the timber off your land so you can make improvements. Yeah. But, timing it right. And you might have a case study like your dentist friend. Yeah. Yeah.
It's interesting. There's all kinds of ways to make money and there's all kinds of ways to think about things. But timber is one thing you can invest in, like you said, timberland is thousands of acres cheaper. Mm-hmm. But you can't really use the land until you're ready to sell that timber off one day.
Yeah.
So
buyer beware, but there's money to be made, it sounds like.
Yeah.
There's always money to be made.
For sure. But we had an awesome time. We had a great time. The networking was fantastic. And, bringing Ryan with Entre Media, now Tennessee has already reached out to Ryan to come document the Tennessee Ranch Tour this year.
Fingers crossed.
That'd be fun.
Yeah.
Are we going? I'm going to keep me up there.
Jeff Hurdle is the Realtor Land Institute president this year all over RLI, and he has already reached out requesting that we come to Tennessee in August this year. He'd like to see us there. So
I'll let my family know.
It'd be a good
already
time.
on my calendar.
That's what's so powerful about the ranch business and what's so fun, the networking, the camaraderie. And you can literally, when you're in the ranch business, it's so different than the residential because you can do deals all over the United States working with these other brokers that are just really good at what they do and knowing, like even with the timberland stuff, like I don't know that much about timber, but I know the right people to call to help us make sure we make informed decisions. If you're a dentist and you want a retirement plan, you're listening to the show and you're interested in timberland, we know who to contact. And like the stuff Ryan's talking about, making sure you're closer to the mill and how can you get a higher ROI on a timberland tract and all this stuff, and talking to the right folks that can set you up for success.
Mm-hmm.
So the RLI group is really powerful. It seems like, and great network. I love every event I go to.
Yeah, it's a good time, good people, and that's what's so great about it.
What was your favorite property?
I'll tell you what, the one with the house, it was older, but the view, it had the pool, and it was when it started raining on us that day. That was a beautiful tract, and it was right near Lake Livingston, kind of.
It was right around the corner.
So, but I'm telling you guys, you're driving up there on this narrow road, and there's just trees straight up on all sides of you. and it's just different. It's a different country, different part of the country. That's so crazy about Texas is it's so vast. You can be here in Schulenburg and drive 3 hours, and it's a different world.
Yeah.
I feel like you're in Colorado or something,
Yeah, I put up the drone at that property and I was like, oh, there's hills.
Yeah.
I didn't know that we were even near hills in Texas like this. This is cool. Looked like Appalachia almost. It was cool.
Yeah, I didn't realize that either, that we have rolling hills here, but there's rolling hills there, but it's just covered by trees.
Yeah.
Tons of trees.
But what's interesting too about that area, you ask them who are their buyers, and it's Houston. It's the same with us. Who's our buyers? A lot of it's coming from Houston. So they have, I guess people are, depending on what side, if you're on the north side of Houston, they're going to East Texas up 45 that way.
Yeah. The Houston Hamptons are growing everywhere.
Yeah. So, but yeah, what was your favorite track, Ryan?
Honestly, that last one, the WR Ranch. The compound.
You're right. That one was fantastic. The compound,
like Horse Ranch, Polo Field.
I've never seen anything like it, and I don't know if I ever see anything like that again. But
Whitehall Ranch is for sale for the right person, and let us know. We'll go over there and check it out again.
Kind of changed my mind. That was I forgot that we went to that. I don't know why.
That's fair.
That was the last day. I was probably wore out. But no, that was a beautiful place. It was awesome. They had a tunnel in it that you can escape. I don't know why you need that, but
I know. Yeah.
Pool, a gym. I mean, the gym with its own kitchen, massage table room,
everything you needed.
A sauna in the gym.
That was just one of the homes.
Yeah, that was just one of the buildings.
And they had the skeet shooting range. It had everything. It was basically your own world inside of a ranch.
Yeah. Polo field.
Polo field.
I don't know if that's how big a polo field is,
but
it was like 4 or 5 football fields.
Yeah.
It was huge. Well manicured lawn.
Yeah. I guess that's what they do out there. It was like horse ranching, right? I didn't notice any cows out there.
Yeah. I don't know. I didn't notice any cattle either. There was more of a horse property.
Yeah.
Yeah.
It was beautiful. Very cool.
So I guess let's touch up on.
Can I talk real quick before we stop? I was going to go back to real estate. We talked about home pricing in our area. I just want to talk about a little bit about land pricing in our area. One of the things that came out on my review was that Fayette County is just one of the more pricier rural counties in the region. Small tracts near Round Top or LaGrange can push up $40K plus an acre, while large working ranches tracts further from town tend to go down to 15 to 22 an acre. So our area is still one of the most sought after in our surrounding when you look at the counties surrounding Fayette County. Northern Fayette County being more dominant because of Round Top, but Fayette County is still, it's at the top.
You're seeing a lot of your cattle guys buying more south because of Round Top. You're seeing a lot of the people that are that way trying to find more affordable land this way. You're seeing that right now.
Nice.
So, yeah, I would say the sweet spot is that 14 to 15 an acre. Those are the tracks that are moving right now.
Yeah.
Yeah.
Our area, the average, there's 279 properties for sale, 37,488 per acre on average. Whereas general, it goes for 29,208 an acre per average. So land's expensive around here.
Yeah. Ryan, has summer a slowdown for real estate transactions? With traveling, you get schools out, you're going to see a lot of people going on vacation all day. So it's still a great season for selling, but it's not. So we're back to, in my opinion, we're back to a spring and fall selling season. Mm-hmm. And so for a while there, that was kind of gone away, but that's coming back. You're seeing more seasonality again. Whereas for a minute there, we weren't seeing the seasonality of real estate. Seasonality is getting back to where it was before, where you're having more of a spring selling season and a fall. The September, October timeframe, you're going to see more transactions. And in the March, April, early June, you'll see a lot of closings. Then you're going to see a little bit of a slowdown in showings and all that. And then it'll pick up, and then you'll have more closings again in September, October. So Yeah.
And recently the stock market is, hitting all-time highs. Is there a relation between that and the real estate markets typically? Or is it like one's going good, one's...
Price to earning ratios are at a point where your ROI is getting not as good. And so you're seeing a lot of nervousness in the stock market when you're seeing PE ratios get as high as they are. So in my opinion, it's helping people diversify. We've had some folks recently sell off some of their oil stocks and stuff to buy land. They're high, so I'm going to sell this and re-diversify into some land and stuff like this. So I think it can be good for real estate, but then also when the stock market does get bad or they don't feel like it's going to be as lucrative, you'll see people reinvesting, like I'm talking about, into more land. So
nice.
Yeah. What else? We want to touch base on the insurance offices, Coy, and what we've done and what's happening in that.
April 1st, I don't know if we discussed that, but April the 1st, we closed on 2 more new offices. On the insurance side, we've taken over Blue Bonnet Agency out of Hallettsville and the Dana Insurance Agency out of El Campo. Reggie and Barbara Briscoe were former owners of that. Loved them, and we got a deal done. So we look forward to growing in those markets and building relationships with those communities and being able to insure them and make them have the confidence that they can lean on us in a time of need.
Absolutely. So new offices in Hallettsville and El Campo, excited about that. So now we're in Schulenburg, El Campo, Hallettsville, and Columbus. Exciting things. So
go to our website, Partners Insurance.
It's partnersinstx.com.
And if you need to reach out or inquire about anything.
Mm-hmm.
What else?
I don't know. I think we're out of time.
Yeah. Right about time.
Okay.
Well, I just want to give you a call to action to keep Bubella Real Estate as a premier partner in real estate and Partners Insurance. If you're needing help in the real estate and insurance business, we want to be your guys. And subscribe to our podcast and YouTube channels. It's Entre.
Yeah, Entre.real estate. Everywhere you can find us. Check out Entre Media. Follow us on Facebook and everywhere else.
And if you're a business owner, Ryan here has Entre Media, and content creation is the future for growing your business. And so if you need help creating content and need help putting together stuff like this for your company, reach out. Ryan would be happy to help you guys out. We're all about helping our communities and our businesses thrive. And we just want to make our communities a better place.
Yeah, or if you just want to talk about it one-on-one, give me a call. I love talking about business.
Yeah, it's fun.
All right. Thank you guys.
Thank you guys. Thanks for listening, and we'll see you soon.
Appreciate it.